Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. This stream's about integrating Bookmap order flow tools with auction market theory using volume profiles of chassis in the intraday developing time frame. It's based on structured trades. These trades are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars, a document section, and of course, the Trader Lab itself. The Trader Lab is made up of a group of traders who come together to leverage their collective experience. It's not about how long you've been trading, what you do, how you do it. What it is about is getting a deeper understanding of the actual business of trading. And most of us, when we come into this business, do not understand the business we're actually trying to be in. And because of that, in spite of random winning trades, most retail traders are not able to create a sustainable business. And why is that? Well, the answers might be found in the Trader Lab, and if you've been waking up in the same place despite working hard, it may have nothing to do with your effort. It might actually have to do with your process and your understanding of the business. So you all have an open invitation to Traders Lab. There is no cost for it. It is available to everyone, and there is a link in the bottom of YouTube if you are inclined. And you will not be solicited or otherwise abused, and you are not required to be a Bookmap subscriber. What is required is that you have a serious interest in the business, and I can assure you this is not romper room. So I know many of you have attended chats, potentially paid substantial dollars for education, and to what extent you have derived benefit, of course, is only you know that. But if you're looking for something different, that is really built around traders for traders, then Trader Lab might be something that you want to explore on your journey. Now, just a heads up, I will be streaming tomorrow. However, since it is Christmas Eve, it'll be a half day of trading in the RT8 session according to the CME calendar. And then there will be no stream on Thursday or Friday, but I will be back next week. So you don't want to miss that, do you? Also, over the weekend, even though you might be spending time with friends and family, if you do need to take a break, you can always do some research or review some of these streams, and they all are posted in YouTube. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. Also, I want to remind you, I am streaming from Costa Rica. I'm on the edge of the jungle and in a very small community. And doesn't have a traffic light. It has a couple of roads. And I didn't say streets, roads. Going through it. Also, my internet does go up and down as well as the power. So if I drop out, it takes about 5 minutes, assuming the power comes back, for this routers and the rest of it to recycle. And it will recycle, and then I will be back in YouTube. Just a heads up. Also, remember, you can review all of these streams at your leisure. They are up on YouTube World. So let's get going, and I have to remind you guys that there is a substantial Black Friday sale going on. And the reason I am reminding you is it ends soon, December 31st. And you can get substantial savings on Global Plus, quarterly subscriptions, data subscriptions, add-ons. Like if you don't have any add-ons, there are certain add-ons that you might find interesting to try. There's the Stop an Iceberg suite. There's sweeps, which I find very interesting and useful, and a number of others. And it's a good time, maybe if you already have Bookmap, or even if you don't, to pick a couple of these, drop in the Trader Lab and see what other traders recommend that might help you with a trading edge. And if you want to try it for a month, there's a 60% off plus data. Remember, all of these go through December 31st, so I'm going to remind you, just in case you're thinking about it, to maybe give yourself a gift of a high-tier order flow tool. It might be something that helps you on your journey. And of course, you have to invest some time to learn it, and there's a load of free education in the Bookmap server, courses on order flow, icebergs, the rest of it, to understand these internal aspects of market mechanics, which may help you as you build out a trade plan and derive a statistical edge. And this is a business of statistics and edge. And that's what the Trader Lab is built on. And it's built on creating edge, trade plans, and dealing with the psychological impediments that we all face because we are human. Now, this is the trader process hierarchy that I share in Trader Lab. It's a way for you to kind of organize information. Auction market theory is really market mechanics. How does it work? Why do we have a market? Well, what's too low? What's too high? What's fair? And the volume profiles, a chassis as I call it, it's just the representation of volume and price since prices aren't created equal. If your price gets too high, somebody might buy the can of tuna for the casserole tonight, but you're not going to have a line out the door, less volume. If the price goes on sale, and this might be a little counterintuitive, you don't get more buying when it's on sale. You get aggressive buying, but the price doesn't stay low. It comes back to retail. So you'll have less volume at an artificially low price, and then the market comes back to equilibrium or retail, and that's where we're willing to buy a product and the sellers are willing to sell a product. But in between that, we rotate. Now, in a supermarket, the rotations don't move much, right? Long time frame, high time frame. In our intraday time frame, basically the rotations are focused on intraday, and this can go down to 30 seconds, 1 minute, and that auction principle or rotations take place in all time frames. That is what is difficult for us because think of a vertical integration, and I think of them like Matryoshka dolls. They fit inside each other. A vertical integration or a vertical chess game. I've thought of it that way also in my career of trying to visualize what's going on. So different chess pieces can be making different moves in different time frames. And it's the same in our business. So time frame can be very conflicted for us. So we have to kind of map out where we trade and what is our trade. And then the context, another element that is really kind of conflicted because certain traders let's say the time frame we have the Christmas rally, is the Santa Claus rally they call it. So the market's going up, but you can take short trades in that. But for a counter trend trader, is the context the same as it is for someone who aligns with the higher time frame? They are actually different. So the context for certain trades might be down, whereas other traders are only taking longs because in their time frame or their alignment, it might only be up. It is a contradiction, isn't it? Well, it is not a contradiction if you determine edge and you determine that you can take any trade anywhere as long as you have a positive expectancy of a outcome that favors you, even though it's random. Now, this thing about predictability being right, and I knew it was going to do this or that, is all fallacy and really, I would say, detrimental to professional trading. We don't know anything. So it's not about saying, I knew this and I'm right, you're wrong. There's no right or wrong. I did my stream yesterday was talking about right, wrong. What is right, wrong? There's only one thing that's right or wrong in trading. That is your plan and you following it. The outcome of the trade, it's not a right or wrong or knowing. The outcome of the trade is random. So you can't be right or wrong as far as the outcome. What you can be is right or wrong about adhering to your plan. And what about this plan? What is right or wrong about the plan? What's right about the plan, assuming you do the work, is only trading when you have an edge that favors you. That's the right thing to do. What is the wrong thing to do? Gambling, trading without an edge, making it up, responding emotionally, not knowing what you're going to do. Imagine having a plan when you come to market that already tells you what you will do because you have built it, vetted it, and then your job is to execute it, not predict the outcome, not get fearful, not bail out, not manage the trade. All those are what's wrong if you don't have those pieces and you don't follow it. That, my fellow traders, is right or wrong. Then where does order flow fit into this? This is what I call the tip of the spear. This is where, as they say, the financial rubber meets the road. This is where our execution is and how we look inside participant behavior. We go beyond just candles and time frames. There is no time in order flow. It is participant based. So if it takes 10 seconds for something to happen or 10 minutes, it doesn't matter. It is what happens, where it happens, how it happens, and that gives us the ability to zoom in to micro structure or micro time frame, but there's no time at this level. It is participant behavior. Hope that makes sense. Now, what I'm going to show you here are structured trades, and these are some examples. They're available for you to download. There's 60 PDFs. These are not plug and play. They're just examples. Some of this is research I did with Bookmap developers many years ago, about 5 years ago, on ideas that we were sharing. Some of these are now been integrated into add-ons, and like most research, some of them are not part of those add-ons. So order flow phenomena, a lot more. And again, they're just screenshots. There's no plug and play in trading. So whenever you see this advertisements for the only one thing you need, trade the first 5 minutes and then get back in your, go back to the Barca Lounger, I'm going to suggest maybe not. But then again, you have to find out for yourself. All right, is everybody tracking? If you have questions, please post them. I'll do my best to get back to you. If I'm not able to answer your questions, use the link in the bottom of YouTube. You can visit Trader Lab Community. There's no cost for it. You do have to confirm your Discord username. Keeps the riffraff out. Hope that's useful. Now, this is Investor RT. This is my higher time frame software. Now, those of you who've been following the stream, now these are market profiles. And remember, market profiles shows us volume. Now, I should say volume profile. When I learned this in the mid-1980s, there was market profile. It was basic. We didn't have volume back then, so it was time, 30-minute brackets they were called. But now we have volume. So this shows us high volume, low volume. Guys, sorry about that. Internet dropped out. Takes about 5 minutes. Look at that. It actually happened. Okay, this is the higher time frame. Basically, what this is saying, and this is this is yesterday, this is day before yesterday. This is the retail price, 45. It was too low. If it's too low in the store, we leave. We gapped yesterday, and the low was around 07, 08. Low of the day, we are in the Santa Claus rally. Buy stops are here. We have something called a single, which is here. I'm not going to spend time because we lost 5 minutes. This is a target. Next target is here, around 49 or 50, and there's going to be buy stops above here. This is an extended target. Hope everybody is with me so far. Please give a like if you're visiting. Okay, 1 second. The YouTube link. Let's see if I can get that for you. I can't. Stephen, can you get that link and put it in Discord if you can? All right, guys, let's move on. So let's try to get this. Things get pretty scrambled over here. All right, this is the RTH Open. One moment. Let me see if I can do this. Trying to get the link from YouTube. I think this is the live one. I think it is. Maybe that's it. All right, sorry guys. Let's go. This is the RTH Open. Based on what we know, we are opening. This is yesterday's low, yesterday's high. RTH Open is, I believe, here. And we did not check yesterday's low. We are above that 09 area, yesterday's low. So that would support yesterday. ETH low is above it. Value area low is here. We're opening on the edge of value, and we get it driving behavior, aggressive buying. So let's take a look at what that means. Go to our context grid sheet. We're opening in range, and to me, this is the edge of value. And you can debate what it is, but to me, we are opening at a fair price. What does it mean? The market's in balance. What do we anticipate? Likely a low conviction day. Are we breaking out of the prior day's value area? Not initially, but now here's the but. What is the trend? Up. What do we know about yesterday? Too low. I need not to operate the vacuum. I need to be thinking in multiple time frames, and the higher time frame, which I reviewed just before I dropped the internet, is up. So if the trend is up, I want to use counter rotations as long as the structure is not violated for continuation longs. Now that's my time frame. The other reason is I have a target outside. I have yesterday's high probability target. I have this single at 45, and I have this 49. If I keep, and that's the low volume node I showed you, if I keep going higher, I have stops sitting here, and this is another target up at 67-ish. I tend to trade the targets and then use trailing stops, but I have a plan for all of this, not an ability to predict anything at all. So if I know I don't know, what do I know? I know my plan. What then do I know? The outcome's going to be random. So what else do I know? If I have a statistical edge based on my plan, which is vetted, then I'm going to take the trades. I'm going to take my stops, which I take, and I'm going to allow the statistics and the plan that I've developed and have confidence in over time deliver the net. And that's exactly how casinos operate. They only play games that have an edge. They don't make them up. They don't get emotional. They're not attached to the outcome. They understand they're going to pay the other side. In other words, cost of production and overhead. And I hope you understand when you're in business, you have to pay bills. Our bills, aside from infrastructure bills, internet, computers, and the rest of it, and brain damage, is to pay the other side because we can't predict the outcome. What we can do is only interact when we have a statistical edge and then have the confidence in the work we've already done for our plan that over time it extracts the dollars more to us than we pay to them. Is that logical? Well, that's traded. So we can try to make it something else, but that's not traded. So now I've had some data dropped out because of this internet, so just be aware of that, okay? All right, RTH open. So what do I know? Well, I know this is value. I know I have ETH low, and I know if I open higher in range that I have about a 97% probability to take out ETH higher low. I have an 82% probability to take out the previous higher low. I have a 76% probability to take out the ETH high. Let me see what else is useful here. There's others, but that'll work. So, and overnight mid, as an example, about a 75%. And what else? The trend is up. So for me, longs. Now let's go to. Now we're in RTH open. Let's come here. This is the RTH open. Let's see it right here. So the market blows to the upside, explodes up. I'd say we got some aggressive buying. So right here, nothing to do. I can't get on that. Somebody else does. Good for them. Me, no way. So I have a high probability statistic here. I have overnight volume point of control. By the way, overnight volume point of control, assuming this is accurate, and I have had data problems, or almost 82% probability. And ETH high and yesterday's high. So as far as I can tell, we're going north. Isn't that nice? So now we're in 1 minute. Now this, I cannot do anything with this because the market just ran away. But I am going to follow my process. I have a process, and the only thing I know is my process. I don't know anything else. And the reason I follow process is because it's vetted and I know market mechanics. And this is what I've shared in Trader Lab. And it's not one way to do anything. It's a way to identify the behavior of the participants. I don't use indicators. So what I'm doing is I'm trying to look at the shopping. And the yellow line is called developing volume point of control. What that is where's the volume? Well, when we have the RTH open and you get the explosion, there's really nothing to do. It's just we're out of here and liftoff. So typically, I'm able to operate in the open if there's some rotation, but I didn't get it here. This is not enough. I mean, and we're in here about 9 seconds, so I cannot do anything with that. Me. Others can, maybe. Me, not so much. So let's watch. VPOC migration. So what is this VPOC thing? This is the retail price or the highest developing volume. And if you go back to the supermarket analogy, it's really the retail price. High volume is where you buy your mustard or your can of tuna for the casserole. That's the fair price. In our business, this fair price is changing based on the time frame you operate in. And you'll see what I mean. So this is too low. We left it. There's more volume up here. New retail price. Now, but what is it about retail pricing? If the price becomes too high and we fall below it, then we ran out of buyers. And if it doesn't hold the retail price and continue, then maybe this price up here might be too high and this price becomes too high. Let's see what happens. So now using order flow, I'm going to get more into microstructure just to give you a sense of it. Limit order book. This is resting liquidity. What does that mean? It means there's potentially icebergs with limit orders sitting here in the book. And if they transact, we want to see the reaction to them. So what do I know? Sellers are here. If I get micro high volume, it's right there. Sellers are here. This is where the sellers were. This is support. This is support. Either I'm going to go up, you like this, up, or this is too high and I come here. If this is too low, I can come back there. And if it's not too low, I can break through it. Let's see what it does. VPOC migration. Let's watch together. Support, resistance, support, absorption, resistance, support, support, resistance. Too high? I'm not paying that. What about this? Too high? I'm not paying that. What about this? Is this too high or is it too low? And now this is resistance. Let's watch. This is multiple time frames as you think of it. And I'm trading inside, remember, Matryoshka dolls, a vertical integration. Now, I'm not trading this. I'm looking at it. And I'm going, well, the higher time frame trend is up. So if the trend is up and this is too low, then I want to look for opportunities to get long. Now, if the trend is up and I see this kind of buying, then I want to use counter rotations potentially for continuation longs because I'm going to try to align. So let's see what we get. Sell sweep. This sets up the potential for a counter rotation long. We have liquidity coming in here. And let's see. Now, where am I? I'm under. So I have the retail price here. Too high. I'm not paying that. All right. Too high here. Get out of here. I'm not paying it. Resistance right there. Break low. VWAP. What are we going to do here? I don't know. Me? Not so much. Waiting for a pullback. Sweep here. What does that suggest? Counter rotation. What kind of trade can I take? Not a recommendation. I'm always going to say that because who knows? I'm looking for long continuation trades. That's my plan. I want to align with the higher time frame. Liquidity is here. Support is down here. This right here, I see this, and I see my buyers right here. Now I'm looking for it to come down lower. This is a advanced long. I'm going to show it to you. Now, this is not something anybody ought to be thinking about. It's structured. I'm going to show it to you. And the reason I say it's advanced is it is not in the PDFs. It is strictly a structural behavior. I get the sweep here, and this is support. I break under it, it's resistance. I break above it, it's now support. Absorption is here. This sweep is suggesting the potential for a counter rotation. So right here, I look at this and I say to myself, and I think I posted in TraderLab, mean reversion, no way in. No way in. I'm looking for out here to come up here. Okay, I'm just letting you know. That's, in fact, I got to mark this. That's my reversion trade for a long continuation trade. So I'm going to show you the actual entry now. So this is where the sellers were absorbed here, and there's the aggressive buyers. So this thing is it's out, it's gone already. Okay, nothing I can do with this. But what do I know? What I know is the buyers were here. There they are. The buyers are there. This is a long to here. This is called mean reversion. This is a bit advanced because it is structural and behavioral, and it's called mean reversion. And since the trend is up, I can go here for my scale and possibly out here. But this is the scale, and then it's north or not. Watch. Notice where the resistance is. I'm going to throw a little line on here for you just so you can see it. So what does this say? Buyers are here, pull back and test. If these buyers aren't here, say la guerre. The pullback right here into support. How do I know it's support? You're going to ask me. Well, this is absorption. There's my buyers, so I know I got my buyers, but I have no way in. Here I get another sweep. Look what happens after these sweep. And it doesn't have to. Sweep, going on. And I'm looking for counter rotation. There it is. Counter rotate, sweep. Again, I'm looking for this rotation. Location, rotation. See what I'm saying? Long. And then wherever it goes, it goes. Now, let's watch. So don't forget now, I have 45 as my target here, and then I have a higher target up, which is here. And that looks like the current high of the day. Neither here nor there. I tend to trade towards targets because I trade the auction. And the thing about the auction is that it creates targets based on volume and participant behavior. Remember, volume represents the behavior of the participants, the shoppers, the traders, the perception of valuation. If the price gets too high in the store, there might be buyers up there, but there's less volume. And when there's less volume, that is low volume. And that's what this low volume area is up here, this low volume node, low volume. I'm not paying that, and down we go. You know? So, and it doesn't have to. It could just keep going. That's not the point, because we don't know. Remember, you got to know you don't know. So now we get VPOC migration. We better label it. Now, what does it say? Let's come back to the language of the market. New retail price. Wonderful. Okay. Going north, Lewis. Okay. So right here, this is, I made up terms for this, VPOC migration. But what else do I see? I got this liquidity coming in up here. And I have my target. So the way I'm operating is I trade towards targets. Now, what happened here? Sellers are here. Break low. This becomes resistance. What do I want to have happen? Keep going. What does it do? Breaks down. Now what? This is support, and also there's stops. We also have a report at 9 a.m. and you might get some evening up. You need to be aware of economic reports. This is important report. So I have support here, and then I have support down in here. Come outside. Variable high volume node at 25. This was too low, right? Watch. What do we see? A long. Watch. So this is a location. No clue. This is a location, except I got the report at 9 a.m., so nothing to do. I get the report. I get stops being taken out, and you see this delta here? This delta is absorption. There's the icebergs. And what else is coming out? Sell stops. This is a stop and iceberg detector. So you have sellers, which are market orders. So that gives you the delta. So you understand stops become market orders, of course, and that's delta. So when I see the sellers, who are they? Sell stops and let's assume initiators. But who are the passive buyers? The icebergs. They need the liquidity to take the other side. Okay? So they're buying. They're buying into the sellers. That's how this might work. What else do we know? Well, if you're in TraderLab, you would know this is an important price. And the market can do anything. So you know that also. But let's look at the trigger. I posted this in TraderLab. Now you have to understand, if I post it in TraderLab, it doesn't mean anything. It means observe. It doesn't mean what the market will do. Now, so we come right to the location. And remember, there are traders in TraderLab, by the way, who will take a short here because they're trading into the stops. If I want to align with the higher time frame, I'm going to use the counter rotations for alignment for continuation longs. There's not a right or wrong. In fact, yesterday's stream was very much all about time frames and what is, quote, right, wrong. And right, wrong is trade plan. It's not only trade one way or only trade with the trend. But if you're a developing trader, less trades, more range, and understanding context or condition is the most important thing you can learn. Because if you don't know which side is the dominant side, then you might be swapping equal risk for less reward if you're trading counter trend. And again, it's specifically plan oriented, and we all have our niches. You know, some I know early on, and well, not early on, but along the way in my development, I just traded both sides. I didn't care. You know, so long, short, long, short, long, short. Yet over time, I kept statistics, and over time, if there was a dominant side, my returns and yield were much better with the wind at my back than trading the counter trend. But I found I had a certain natural attraction to the counter trend because if the market gets lopsided, the counter trend can actually be very dramatic and very quick, especially the short side. So I was always drawn to fading the dominant trend. But I found statistically over time that the yield was better when there was a directional market to be with the more dominant direction because the range would be larger. And for developing traders, I'm going to strongly suggest that you learn to identify the dominant side and work your plan initially to only trade with the dominant side. It lets you anticipate the trades, less trades, more anticipation, more recentering yourself mentally because you can anticipate it. If you're flip-flopping back and forth, you're going to have a heightened more cortisol released, and you do need to understand the dynamics of chemicals in your brain and what you're doing and the FOMO and all the stuff that gets triggered by dopamine. There's a lot going on here besides a level on a chart. And those are the things that most of us we discount because we're too much in a hurry, FOMO, for the next trade, not getting a deep understanding of ourselves. So in trading, and one of the reasons I created TraderLab, and TraderLab has been going on, I guess it's going to be going on its 5th year now, is because most developing retail traders have no idea really all the pieces that are required to create sustainability. It isn't setups. Setups are not the major thing. It is alignment, understanding market mechanics, developing the discipline and the trade plan. And when I say the discipline, you guys know what I'm talking about. Of all the things that are going to potentially take you out of the business, it's going to be you. I believe anyone who comes to Trader Lab and does the work can learn how to trade. Variable high volume node, location, going to 0. Watch the change. So we're coming down, we come to a location. Now here's something else I know. If the open is here and we took off like a bullet train, there's going to be sell stops under here. So as we're coming down, I'm thinking outside, possible, and pick the stops at the opening swing low, which is a trade for me, and then reversion back. So I'm looking for longs somewhere. However, so down here would be my preference, because if I can get the longs out, then I have shorts potentially trapped and they become buyers. But here's the but. I also know I can get the reversal at any time. But for me, the reversals might happen where the market already voted on a retail price and it left it. So I have that same as up here. Okay. So let's look at the trigger. And again, doesn't mean anything. Doesn't need to be your trade. It just happens to be one of mine. So let's look at the actual microstructure. This is how understanding order flow with Bookmap and market mechanics using a profile and auction market theory might work together. So right here, going down, going to 0, support, who knows, next area. Again, for me, I'm aware of this and I'm looking at this. But when I come here, I'm looking at it. Now, let's look at change. So here I see absorption. Here's the sellers. Why didn't it go up? There's my buyer. There's my delta. Where's my sellers? Here, here, here. Buyers there. They're absorbed. Sellers, icebergs, you see them. Sellers are in control, going to 0. Buyers take a shot here. Sellers, look at the iceberg. I can see the seller and I can see the delta, which tells me buyers, but they're being absorbed. Does this make sense? Please give a like if you're visiting in YouTube, by the way. So, sellers, 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 buyers, who knows? Watch. High volume is here. Remember, I'm not paid that, your store. Yeah, but it's on sale. And what do I anticipate? Not predict, anticipate. Too high, lower. Location. Break high. What is that? What? Change. No, and here's how you see the change. It's in rotations. So down rotation, up rotation, just chop. Sellers are here, buyers are here. I can see the absorption on both sides. I'm going to draw a little box around it just so we can see it. It's going to align with the low volume up here. I'm not paying that to it's on sale. Oh, but it's on sale. Retail. In the mini mart. Let's go. This is so simple, not to insult you, but what is this thing about complexity? Does it somehow make it better? Does complexity become our rationalization why we can't do it? Or is it not complex? We make it complex, looking for certainty when it's really simple but random. Where's the retail price? It's here. So what do we know here? Buyers are here, buyers are here. Well, there's sellers up there. How do I get into this thing? Well, now that I see my buyers, I can be looking at it here. There's my sellers again. Far as I know, going here, right? What do I see again? Buyers. As soon as I'm coming up here, or here, or here, I can buy it and I'm going back here, mean reversion. And if you understand what you're looking at, because the buyers are here, the buyers are there, and the buyers are here, right here, right here. You could be a buyer because it's above the retail price in here. Up to you. And where's resistance? There. So if you get long anywhere in here, this is called mean reversion. This is the current retail price. That would be your scale. And then your stop stays under here, and you're coming back to check the one above. This is the last place it was too high. Let's just see what it does. Break above it. Watch. Resistance becomes what? Support. Target. Right there. Sweep. VPOC migration. Next target. I think this is where the data went out. 5 minutes, I think, whatever it is. There you are. That's about it. Not a lot of trades, guys. Do you want a lot of trades or do you want a lot of range? Which one do you think is better? Now, let's come back to targeting. Let me show you the higher time frame again. And then I'll take any questions you guys have if I can hang in here. Remember, if I drop out, I will return in a couple of minutes. Okay. This is an intermediate time frame retail price from yesterday, too low. The day before, intermediate time frame retail price, too low. I'm trading in multiple time frames, but I try to stay aligned with the higher time frame. Where are the buy stops? Let's come back to the other issue. The buy stops were here, and this is Friday. We closed down here. We gap higher. What do we check? The low over here, 45. Longs. Where's the fuel, as I call it? Buy stops, buy stops, buy stops. Take those guys out. Thanks for playing. This is the target. What do we do the day before yesterday? Gap higher. Actually, yesterday. What do we do yesterday? Gap higher, test the next level. 07, 08. On this day, this was the target. Didn't get there. All right. Here, it becomes support. And actually, we did this in the ETH, life in the fast lane. Open on a gap, and it was aggressive. We did not rebalance in the ETH. Up. What about today? Open at the edge of value, came across the range, took out yesterday's high. We had stops up here for yesterday. We have the single at 45. We have this, which is on the Bookmap price map there. We have stops up here. We have another level here, which may or may not happen. And then we have this as our next target. Now, timing, will it do it? What'll happen? That's not our job. It would be nice if we could say it's going to do blank. But the only thing you could say it's going to do maybe, because maybe it's going to do that. Maybe it won't. Where are those stops? Up here. 62 half. Here. So 62 here. This high, whatever this is 62 3/4. And then this naked volume point of control, which is, this is the RTH highest volume. This is an intermediate time frame highest volume. They work the same. And then when I go down in time frame, as you think of it, this is the same thing. This is a microstructure, and there's high volume. The market, what does it do? Goes and tests. What does it do on the high end? Somewhere up here. Goes and tests. Where's the high volume? It's right there. What does it do? It tests. So sellers are here, buyers are here. Break under the buyers, pull back and test. Break, test. Liquidity. That sets this up. What's the opposite side of that? Break, test. and location. Okay. And then either it continues down, or if I see my absorption, and this is a vetted trigger, I get long, and then I'm looking to come back across the range. Trend is up, you see. Now there's another trade here I'm going to share with you. It's a structured trade in Trader Lab. It's in those 60 PDFs, called the IB continuation trade. Now, everything in Trader Lab, doesn't matter what you see, what you hear, whether it's from me or anybody else, you have to vet everything. I want to stress vetting. What does vetting mean? You guys have cruised across the internet world, and wherever you've been, you see, or YouTube, which is very entertaining, you see the only trade you need to take in the first 10 minutes, I make blank blank per day doing this. It's the only one thing or the only one trade. It's unbelievable, right? And when I'm using the term unbelievable, it is unbelievable. But we want to believe it because it's appealing to our psychological needs for certainty, right? Isn't that what we're looking for? Confirmation, is that in your vocabulary? And certainty. If it doesn't exist, how are you going to get it, right? So the thing to understand is you can get ideas, but most of the things that you do as a retail trader, everybody else has done. Me too. We've all done it. So at some point, because of random winners, you're going to think, well, this is pretty good. Look at this. It worked today. What do I do to make it better? How can I be more, certain? I'm going to give you a simple answer. You can never be more certain. It doesn't exist here. But how do you know if that isn't a losing trade over time? That's what vetting is about. Gamblers have winning hands. You have to remember that. Every setup in your software toolbox, every indicator has winning trades. But why is there 150, 200 indicators in your higher time frame toolbox? Why would there be that many? Number one, they all have winning trades. Number two, none of them probably have any edge. And we tend to put multiple tools together to make them better, right? More edge. I did that. I built trading systems because when I was managing money, it was across, and I was a trend follower. Okay. There was no day trading when I did this. So when I was a trading advisor, which is what I was, I managed a large pool of dollars, and it was across a lot of asset classes. I couldn't do it manually. I had to do it. I had to systematize it. So that was optimization and all that. That's what you guys do in your own way. Whether you use a computer to do it or whether you do it manually, it all comes out to be the same. But how about this? It really does not work consistently. It works randomly. So you're always trying to fix it or make it better. And you could say make it better or fix it. You wouldn't need to make it better if it wasn't broken. Isn't that true? So you have to vet things. You cannot take anything for granted or accept it without digging into it, making sure you understand it. And if you come to Trader Lab, that's a requirement for you, because the way you are going to ultimately find your groove or your psychological alignment is going to be different than me or other traders in Trader Lab. I trade larger rotations, risk reward ratio for me. Other traders trade counter rotations with the trend, without the trend, all around. And they do that. It's psychologically aligned with them. So where's your edge? You're not going to answer that alone. You're going to answer it if you understand how the market works, why it does what it does, how to get an alignment. Then you're going to find your edge. And me, I want less trades because all trades have equal risk, pretty much subject to volatility, but all trades do not have equal range or equal potential reward. So I don't treat them all the same way. And most developing traders or developed traders differentiate between marginal trades and what you might call an A-plus trade. Do you know the difference? So for me, this is a long. Now I'm going to talk about the IB continuation trade. This is a structured trade. Now, why would it qualify? Let's talk about it. The trend is up, number one. Number two, we found aggressive buyers off the open. We tried to wash them out. We're not successful in washing them out. So that suggests to me the aggressors are still here. Got my last long over here, and then the goal is to come up in alignment with the trend. Now at 9:30 Central Time, my time here in Costa Rica, by the way, if I disappear, it's the monkeys, don't blame me. this is an IB continuation trade. It's in those 60 PDFs I share every day here in the stream, and you can get them, use the link in the bottom of YouTube. If you want to visit TraderLab, there's no cost for TraderLab. Just remember, it's a serious community about the business of trading. So, we have a good time there, but basically it's all about business. So we're all in a hurry to create sustainability. So this is the first hour's high, IB high or low. The IB in this configuration has approximately, IB high or low has about a 98% probability of getting taken out. Which one? Pick one. But if the trend is up and we're outside of value, and what else? Wait a minute. I lost yesterday's high. Where did yesterday's high go, guys? Somebody give me yesterday's high. 36.25. Thank you. Okay. IB high. We're outside of yesterday's range. There's only one way to trade unless you're counter trend trader, and that's go north, young trader, go north. If I'm outside of range, outside of value, according to the context grid sheet I've shared, there's only one way to trade, and that's long, unless, of course, you have an edge as a counter trend trader. That's perfectly okay, right? But under these conditions, the IB continuation trade is qualified. Here's where it is. So at 9:30 Central Time, the first hour's high, which was created here, is now on the hit parade with a 98% probability. When I come up over here, notice how I use these. Let's talk about how I use them. This is something I came up with many years ago. And initially I was actually ridiculed for thinking like this. I was like the purist, and you'll get this, when you're in a group. And I was in a group of market profile traders, and this is a long time ago. I couldn't even tell you when it was, because we didn't have volume. Volume was new, so it was still market profile. But I started putting them both together. So I overlaid volume profile on top of market profile, and I watched them both. The point of control, which from market profile days, is where the market, it was time-based, spent most of its time in a half-hour period. And what that showed us was if the market stayed in a place for a period of time, then we knew more volume transacted because this thing didn't move because of time, not because of volume. Then when volume became available, it was more accurate because no more time, just actual volume. So I had both of these on my chart at the same time. And I would watch the volume point of control, this yellow line, versus the point of control, which was a time-based line. Both of them are supposed to represent volume. But the POC, as it was called, was really a proxy, only because if it spends more time somewhere, logically more volume. So I watched the behavior of them. And as I watched the behavior, I saw differences. And I also saw that they would change. But the volume was much more accurate, much more sensitive, while the point of control, they'd be at different locations. Because just because something spent time somewhere doesn't mean there was more volume. Kind of strange, isn't it? So I started researching it. And I started sharing what I found in the community, and I got a lot of pushback because these were very rigid thinkers. And one thing I'm not is a rigid thinker. And so the downside to not being a rigid thinker is to being a researcher and spending years researching things and getting rid of them, things that look promising. So this is the IB continuation trade. So let's remember, resistance was here, break high. Now, right here is the IB. And at 9:30 is the IB, so IB high. So I want to buy here. So you can get long here. You can get long right there. That's the IB continuation trade. And then you're going for this and wherever. But this is the next target, okay? And then that trade is wherever. Then it's trade management, wherever we are. So How many trades were there today? Well, subject to your plan, at least for me, and I'm only talking me. You don't forget, I like to trade out of a Barca lounger. I think 3. But 3 trades, 1 here, 1 was someplace else, I think, and the IBC. 2 or 3 trades, that's it. No stops, which is not material because I take stops like everybody else does. But this is the Trader Lab, and this is really what structured trading is. You know where you'll take your trades. You don't know if it'll get there, how it'll get there, when it'll get there, or any of the above. You don't know if you're going to take a stop or get a scale or scratch the trade. You know nothing. Let's go back to what you need in this business. What you need in this business is a plan, and the way you measure yourself is how you adhere to your plan. What's right or wrong? Adhering to your plan. So the plan exists before the market opens. You have a plan. It's like a pilot before they fly. You go over the checklist. You make sure everything is trimmed properly. Fuel in the tank, or maybe some espresso for breakfast. Whatever it is, you do it. Then you come to the market and you just wait for the trade, because the trade will come. It absolutely will. There hasn't been a day that I haven't had a trade. Doesn't mean there's a day that I haven't had a profit, because there are days where I don't have a profit, but that's okay too. The other thing is you got to have the guardrails in. You have to know, and you don't know until hindsight if your plan and the current condition of the market are in alignment. There's no way to know that until hindsight. So you can't look back and judge yourself by what you should have done. That doesn't exist here. What you should do is what your plan says, because that's the only measure, not the outcome of individual trades. Because if the casinos can't predict what the outcome of one hand is of a game, how can you predict the outcome of one trade? So your business model is gaming. So if you understand that, it's no longer a business of being right or predicting. It's just a business of playing the game that has an edge. Does that make sense? How you guys doing in YouTube? Hope you're getting something out of this. Sorry about the dropping out. Dan, I have to ask you, are both of these streams going to be up on YouTube? How are they going to get spliced? What's going to happen? Jacob, if you want to visit Trader Lab, there's a link in the bottom of YouTube. You'll see a bunch of links down there. You can click any of them, and you'll see you have to verify your YouTube, your Discord username. You'll get a little code, keeps the spam-alators out, and then come over to Trader Lab. You're going to see a bunch of chats in the Bookmap server, a lot of free education. There's other streamers, stocks, options, crypto, order flow with a high tier tool like Bookmap, algorithmic behavior, market maker behavior, and a lot more. There's a lot you can do. You know, Bookmap was not designed initially for retail traders. It was designed for quants. And what happened was traders started, saw what Bookmap was doing with a graphical interface, and they said, hey, can we have something like that? Would you let us? And it kind of evolved out of there. So this tool was never designed initially for us. It was for professional traders. In fact, I've worked with former hedge fund traders, hedge fund traders on tools, custom tools for Bookmap. So I have a reasonably good understanding of the API. I've done work in there, work with coders and things. There's just so much more to this than what is on the retail level. But I will say, if you can understand it in the world that we exist in, and you have to educate yourself, everyone, by the way, there's no plug and play. If there was plug and play, we all would have paid what? How much would you pay for that golden seminar that teaches you everything you need to know. Then you call up the ATM company and you have them move an ATM in your basement. I know back when I was struggling with this and I kept waking up with Trader Groundhog Day, winning trades, trying to make it better, but not having a consistent outcome, having a random outcome. I called it Trader Groundhog Day. I would have paid 10, 20,000. Didn't matter. Because if you get an ATM in the basement, what would you pay for it? Right? So we all go on the quest, right? Everybody has, and probably many of you still are. And the thing is, you will continue because there is no shortcut, no holy grail. You actually have to learn this business, and you have to find out that this is not what you want it to be. It is a unique environment. And I kind of reference it in a way because I know what I did, and I didn't do it intentionally. I just did it because I didn't know any better. I was trying to squeeze the risk out and create certainty for myself because my nature and our nature psychologically is to avoid risk, avoid the saber-toothed tiger behind the rock. That's why the species has survived, right? So if there's other apex predators out there, we are wired, a primal wiring for us is to avoid risk. That's hopefully why you don't drive through a red light, right? And you don't step off the curve wearing a blindfold, right? You're not going to do that. Well, here, our psychology perceives this as the saber-toothed tiger. It cannot differentiate. So when you have you're intentional, I'm going to do this, and then you're paralyzed, or you do something else, or you wait for certainty, that's all primal wiring. And most of us never understand that because we're too busy looking for the setup, the sure thing. There's no sure thing. So if there's no sure thing, then we have to find out what is, and that is probabilities. And then we have to find out and recognize the things within ourselves that actually will take us out of the business if we don't understand the mechanisms. And this is some of what I focus on in Trader Lab. And there's so much to trading. But I find that the simpler you make it, the less conflict you create in your own mind. So simplicity really is the secret sauce, if there is such a thing. So complexity does not get you more. It creates conflict and ambiguity. So when you start thinking about, if I put more in, I get more certainty, what you're doing is your subconscious mind is actually directing you to avoid risk. But we're in an environment that is risk. That's it. You get paid by taking risk, not by avoiding it. The casinos get paid by taking risk. They can't avoid it. And they also accept there's a cost of production involved or overhead, but we don't think that way. We think in terms of saber-toothed tiger. Avoid the risk, not I'm in a business that I have to pay cost. Does this make some sense? Yeah, Jim, thank you. Happy holidays to you too. There's JJ Marks. How are you, JJ? By the way, a reminder, I will be streaming tomorrow. It is a half day at the CME. So futures will trade to approximately 12 noon Central Standard Time. Maybe a little tad beyond that, but it's going to be a light volume day. So whether or not you trade is your choice. I cannot say anything more about it than that. But volume will be light, and it may be a good day to finish up your shopping, do whatever you need to do if you celebrate Christmas. There will be no stream on Thursday, Christmas Day, or Friday. I will be streaming on Monday, and I will stream next week, just as a reminder. By the way, Christmas in Costa Rica, they use a, what do they call it? A quad, and Santa Claus comes on a quad. Kind of interesting. Christmas in Acapulco, he parachutes in. Haven't been there in a long time, but I've been there a number of times. Fun facts to know and tell. You guys have any questions? Thanks, JJ. Good to hear. Guys, I want you to know it's getting towards the end of the year, and This is a time of year where I think it's a good time to reflect, spend time with family, seek balance. Uh, you can very easily get lopsided when you're in this business. I've seen it happen so many times. Yeah, Willard, speaking of a quad, I'd like to see you in your Santa Claus outfit. I think you could maybe pull it off. And you have the quad, right? It's going to be 89 degrees here. It makes it rough for Christmas, but we'll put 87 today. It's 87 right now, so it's a little toasty. So I want to thank all you guys, by the way. Reflect. Take time. You do need to take time to reflect. You need to take time to be with family. And you also need time to let go of this business for a little while. Sometimes you need a break and to be a little more centered. Stay centered here. Do not get lopsided. You never want to sacrifice the time you have with your family or what your family contributes to your well-being. You have to feed that family in order to sustain it. So always keep that in mind. When you have goals, they should not just be related to trading. Goals should go beyond trading. How do you fit trading into your life? Now, I don't want to go into this too much, but we all know what it could be like, I think, to get out of whack, as they say, and not pay attention to things that are really important. So be sure to do that. There's always going to be the market. It's always going to be here. But the things that you really value in life, you cannot take them for granted. Market will be here. You want to be here. So you need a trade plan, but you also need to support your family. And that means all the activities and things you do and the time away from being immersed in this business. It's very easy for that. I've done it, and I know many, many traders over the years that I've worked with can get very out of whack. If you know what I'm talking about, minus 10 degrees where you are, well, purchase a ticket, come on down to Costa Rica. Any final questions, guys? I'm not done yet. I still got about 15 minutes, but I want to make sure, I always talk about, structured trades, trade plans, building a business. Part of having a business and sustaining it is psychologically to be balanced. You get out of whack, it's going to impact you, and it's not going to have a good outcome. I can say that because over the years, from time to time, I'd get out of whack, and I'd be totally immersed. 12 hours a day doing this, and I'm talking weekends and everything else, doing research and coding. You can really go off into Twinkie land with this because of our burning desire. And you have to be really motivated to do this business, to push through the obstacles. Many developing traders just don't have the fortitude and the self-discipline to not gamble and to recognize when they're not being successful. And it takes discipline all around to have the opportunity to create sustainability in this business. VPOC migration. So the last long is there. This was the next target. And we're in a float. And then this is the next target up here. So we have this, we have this. And these aren't recommendations. They're just on the hip parade. So let's assume, remember, the last long was there. Now, you could have taken it here. And the reason was we had over 98% probability to take this out. Subject to your plan, you could get long there. Or you're waiting for the structured trade. You could get long here or here. See? These are all structured trades, and these are derivatives. In other words, it's the same thing, but you're leaning on other structure. All these are longs in the Trader Lab. You can learn this. Now, again, you take a long, you take a stop like the rest of us do. So we have to, as they say, step up and, that's trading. Trading is not complicated. It really isn't. What it is random. So we have to understand randomness. So in your trade plan, you'll notice at the top of the stream all the pieces I went over, and there's a bit more, but before the first trade goes on, this is what, at least for me, what I have to do so I'm oriented. Because let's say we opened and the first move was down. Am I going to short that? I'm not. I'm going to use that rotation down to buy. But I might see a short setup, but it's not qualified in the condition of the market. So what might be a short for me with exactly the same structure in the short time frame with a short context will be no thank you, because I see the counter rotation or the short trade. But since it's not qualified, I don't take it. I then look for the other side of that trade, because then those sellers will become buyers. Those sellers have buy stops trailing them. And they may be right. It's not right, wrong. Except I'm going to say, if my context is up, I'm not taking that short. I'm using the short not to take longs, so I can look for the reversal to squeeze those shorts, and they become my buyers. Does that make sense? It's a matter of plan, not of outcome. Is that making some sense? Do I think it's, Steph is in TraderLab saying, is it profitable to trade the ETH during London just working? I trade ETH. I'm not up that early, but I trade ETH primarily, and I'm only talking about me, mean reversion. Once there's been volume and structure, often what the ETH does, it gets into rotations or balance. That means it's just outside in, outside in. So mean reversion is outside in trading, this kind of thing. This is mean reversion here, outside in, like this. Outside in, mean reversion, mean reversion. Now, if the trend's up, for me, it's only the long side, only the longs, only the longs. You see, so I'm only trading with the trend, so I'm only taking one side. Other traders are going to take a short here. I see the short there. I'm not taking a short. I'm exiting my longs, and I'm looking for a long somewhere, on the retracement to wash these guys out, the sell stops. Once these guys come down, I'm looking for a continuation long, because that's the trend. And also, I'm aware that the shorts from here will become buyers if they get squeezed. That's what this is. These guys, thanks for playing. They get a coupon to the buffet. And, that's fine. But I'm looking for them to help my long. So that's why I take the long. And then the continuation. So it's just longs. Other traders take both sides. It doesn't matter. See, the thing about trading, there's no judgment. The answers lie in the statistics. You can judge your trading by statistics. And the trades you take, if you must track them. This is what most traders don't want to do. They just want to push the button. But you can track your trades, and it's not P&L. It is each individual trade should be labeled, have a name, have a qualification to it, have a risk management part to it, how to get risk neutral, a trade management component, and subject to how you trade, a targeting component. For me, I trade the targets. And if it goes on beyond there, that's fine. I'm very satisfied if for me, I'm only talking about me. If I go here, I'm going to get risk neutral. I'm going to trade to a target, or, here's the or trade past the target, but have trade management. And then whatever happens, happens. And then and it's not going to be, gee, I shoulda, because how do I know until hindsight? The lunatic under the hood, the judgmental self, right, is going to say, tell me if you don't hear this, I coulda, I shoulda. No, there is no shoulda, there is no coulda. The only shoulda is your plan. If your plan says trail and don't get out, and you get taken out here, the lunatic under the hood, who I call Hyde, Jekyll and Hyde, is going to be looking in hindsight saying, I could have got out here. How can you do that? Or I should have got out here. No, unless it's your plan. If your plan says, well, if it comes under this sweep, I get out, then you should have got out right there and you followed your plan. because that plan, that shoulda, you shoulda is the plan, not coulda in hindsight. Shoulda is the plan. I should do this. And if I don't, it's an error. If it goes up here and takes me out there, I followed my plan. That's where I get into yesterday's stream, right or wrong. What's right, what's wrong? Is it wrong to get out based on my plan? Or is it really wrong not to pick the high of the day? What's wrong? What's right? You see? The statistics, I'm getting the question, where do I get these statistics from? They're based on data mining, and this is available in TraderLab, and of course everybody has to vet them. It's based on a sample size of approximately 1,000 days, and it's really based on the open. Where does it open relative to range? Is it higher in range from settlement, lower in range? That's one statistical type. The other part of this is the context piece. Do we open in value, in range? Are we gap? What are we doing here? The type of contextual piece tells us the potential for dominant trade. So we put together statistics and then where we open, because that's valuation. So there's these components. Then you got to look at the higher time frame and what's going on up there. Well, in the higher time frame, it's north by northwest. So we have to put that together, wherever that went. Here it is, Investor RT. So I know in the higher time frame, I'm going north. I know there's buy stops here, buy stops there. I know the possibility exists to go here and to get the stops up there. Why? Because the market goes down to go up, goes up to go down, goes down to go up, goes up to go down, 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 down to go up, to go up. And it's the same thing I'm doing in shorter time frames. This is all generic. That's why I call them Russian dolls. The market goes down to go up, and in different time frames can go up to go down, goes down to go up, goes up to go down, goes down to go up, goes up to go down, goes down to go up, goes up to go down, goes up to go down, goes, trend up though. So this rotational process, and this is when I brought up the hierarchy, is happening in all time frames. So the auction happens in all time frames. The context in the higher time frame is up. So if I have rotations and the condition of the market is an uptrend, then the wind is at my back if I get aligned with the long side. At the moment, it can change intraday. This can do the Acapulco cliff dive, blow out everybody who's long, and still be in an uptrend. You see? So this is, and you can get some ideas about this and some of these screenshots of trades that and these are not, this is not a trading course. That's not what this is. This is a community. So I'm not here to teach you, here, come here, it's a free trading course. No, can't do that. It's better that you see what everybody does and then follow along, ask questions, and find what you relate to. There's no one way to trade. But I am going to tell you that trading, the more complex you make it, the more conflicted you make it, and then you don't know why or even if something has an edge. So that, I find, is the answer. Where do you get this answer? You can get some answers in TraderLab. It doesn't work for everybody because nothing does. Some are not really ever going to get control over themselves, the psychological component. And many don't have the discipline to go through and tear down what doesn't work and replace it piece by piece with intentionality. We have I think a semi-retired, I'm not sure, psychologist, I forget now, but in the TraderLab, and we talk a lot about psychology, all of us. And You can scour the internet. Everybody talks about it. And we talk about it in trading because it's the biggest obstacle. I believe anyone who comes to Trader Lab and does the work can learn how to trade. That's personal belief. And there's many traders in Trader Lab have turned around their business, and they're sustainable. And there's other traders who are going to come to Trader Lab, and no matter what they do, they're not going to be able, this isn't the right business for them. That's a fact too. Not everybody can be a brain surgeon, right? Well, this is like playing at the highest level in the NBA or being a concert pianist, or being a translator of foreign language. But this requires an effort beyond what you think it will be. And it's going to require you to tear down what you believe, which may be defective. You cannot bend this business to be what you want it to be. You have to bend yourself to the business. And that is like landing on an alien planet for us, because this doesn't fit everything that we believe about ourselves and about the environment we're in. This is just foreign. So we are not familiar with this environment that we need to solve for. And we're going to initially try to solve for what we think it is or want it to be. And our psychology and our fear of loss and our need for certainty is what's going to guide us in the directions we go, because we're going to try to fulfill the primal psychological needs. Does this resonate with you, by the way? Retired psychotherapist, 45 years. Okay, JJ, one of these days I'll remember. But I do know you went under the hood with your screwdriver. We all need some of that. I'm getting a question here. Why do I use the IB and multiply 1.5 and 2? Those are measured moves. They're basically, you might want to think about them as fib extensions, which I don't use. I spent years working with Fibonacci, Elliott wave, all this stuff. Fib and Elliott wave. I mean, I time cycles so much. Sorry for the disruption there. The internet dropped out. Just want to remind you that Bookmap is having an end-of-year sale. And go to bookmap.com if you want to take advantage of it. Substantial savings are available. And don't forget, tomorrow's a half day at the CME because of Christmas Eve. I will stream tomorrow, but I will not be streaming Thursday and Friday, but I'll be back here next week. So I'll see you guys tomorrow. And thanks again for visiting the Trader Lab. Sorry for the disruption here from Costa Rica. See you soon.